It's about that time of day again. My name is Joseph. Thursday evening, November 29th. Welcome back to your nightly newsletter. I help new traders just like you earn consistent profits using a simple three-step trading strategy. And my plan this evening is to identify the best locations to look for my favorite entry patterns in tomorrow's trading session. And tonight, I'm covering crude oil, S&P, Nasdaq, gold, and euro. Starting off this evening, crude is bullish back into the weekly range. Surprise, surprise. So I'm going to keep the same strategy that's worked so well already this week. Let's keep fading those bear breakouts using the two-try rule tomorrow morning. The S&P is also bullish right into last week's high. Boy, we saw that coming a mile away on the S&P today. And after such a strong run over lunch, I'm looking for these buyers to start taking some profit, and I'm looking to see if I can short this sucker back down where we came from right earlier on in today's session. Nasdaq is also bullish, also trading at the high of a range this evening. And so, of course, I'm looking with that bull range. I've got both buy and sell opportunities setting up on the Nasdaq for tomorrow. So stay tuned for more on that in a moment. How about some gold? Gold is bullish with a spike and range. So my plan is to look for buying opportunities below the range. And of course, we're using that two-try failure pattern on the gold tomorrow. And then don't forget about the euro. The euro is bullish, but we're right at the high of a range tonight. So I'm sitting on hands. I'm going to wait for an opportunity to buy the low of that range on Friday morning. Boy, speaking of Friday morning, tomorrow is the end of the week, the end of the month. That always spells big opportunities. We're expecting to see some great volatility as we go into the end of the week, end of the month. And as always, I've got a red hot newsletter in store for you guys and gals tonight. We're going to get this party started in just a couple seconds, though. Before we jump into those charts and put the plan together for tomorrow morning's session, please don't forget, if you're watching me tonight on YouTube, make sure you never miss another video by joining our mailing list. You can join the mailing list by using the opt-in form at the top of the webpage here at Sideways Markets. Also, too, if you're not joining me tomorrow in the trade room, the next best option is to download all the charts from tonight's video. How easy is that? There's a big button right below this video on our blog, right? Click that button, download those charts, right? And be ready for tomorrow's trading session. And don't forget, if you have any questions about anything covered in this video tonight, you can always pick up the phone and call that toll-free phone number, or you can always drop me a comment in the comment section below this video. And also, too, before I go, if you like what you see here tonight, please help support this channel by subscribing, and when you do, hit that bell icon so you get notified every time I post something new. And as always, it is awesome to be here with you guys, getting ready to wrap up the week here tomorrow morning. But let's not waste any more time. It's been a great week so far, but as I always remind you guys, we're only as good as our next trading sessions. Let's get ready for tomorrow. Tomorrow is end of the week, end of the month. Yeah, end of the week, end of the month. As you can assume, there's going to be a little bit of fireworks tomorrow morning. On top of that, we've also got the G20 summit, right, getting started. I think, where are they going? Argentina? Something like that. It doesn't matter. It doesn't matter. The bottom line, though, is we've got all the world leaders getting together. I think it's Argentina. It could be Austria. I can't. Someone with an A, if I recall. It doesn't really matter, but they're all getting together tomorrow. We should be hearing some headlines start to come out, right? We've got rumors about China and U.S. meetings, right? Putin with Trump meetings. We've got all kinds of these rumors going back and forth. None of this, of course, has been solidified yet. So tomorrow is going to be an interesting day for unscheduled news, right? Some of those, newspapers writing about stuff ahead of that G20 summit over the weekend. So we're definitely keeping our eyes open for unscheduled stuff on our radar tomorrow. As far as scheduled events tomorrow on our radar, we got inflation tomorrow, right? Bright out and early there in France. If you're in London, or if you're basically anywhere where you can be trading that early in the morning, if you're in Asia or you're in Europe, you get the CPI. And we talked about CPI yesterday. Anytime we talk about CPI, anytime we talk about inflation, right? Always thinking gold and euro for tomorrow. So keep your eyes on that. Then of course we got the GDP and the Eurozone flash index tomorrow morning at 4 o'clock and 5 o'clock. We got more CPI from the Italians tomorrow morning. So this block right here, as you can see, quite a bit of news right? Quite a bit of news tomorrow before the U.S. session even begins. So we get a lot of news tomorrow, especially news for gold, right? And currencies tomorrow. Lots of inflation numbers right there tomorrow. As you can see, though, when you go to the U.S. session, there's not much on the calendar tomorrow. It could have been non-farm Friday this Friday. That's next Friday. The first Friday of the month is next Friday. So there's not much in the U.S. session. So most of the scheduled news is stacked up there between 2:45, 4 o'clock, 5 o'clock. Yeah, I'm not forgetting about you guys to the north. You know, we got the GDP right at 8:30 Eastern time tomorrow. I love you guys up north, but usually that number just doesn't move the markets very much. If you do want to kind of trade that GDP number, you know, a big export out of Canada is oil, right? Oil, curling, great hockey players, nice people. But, you know, definitely watching crude oil, right? I would imagine crude be on our radar tomorrow. Again, don't hold your breath around the GDP number out of Canada. Probably not going to be that big of a market moving event tomorrow. What will be more of a market moving event tomorrow is that combination of the end of the week, the end of the month. That tells me get there early and get out of there early. I would say tomorrow morning, end of the month, end of the week, no major news in the U.S. session. You know, you got, Trump, Putin, bromance, brewing in Austria or Argentina, wherever the hell they're meeting. I would say 10:30. You've really got to have a good reason to be trading after 10:30 tomorrow morning. Maybe a little bit later, but, really kind of keep your eyes set on early. Earlier the better tomorrow. That will probably be your best bet. So if you're in Europe, you get a good advantage. If you're in the U.S. like I am, right, get up a little bit earlier, find those patterns. I'm going to lay out a good plan for us here tonight, but early in, early out, early in, early out. Volatility should be pretty high tomorrow as we go into the end of the week, end of the month. The problem is, as we go later in the day tomorrow, you're going to start seeing a lot of desperation. People will start getting desperate, end of the week, end of the month. Traders who have lost money this week, lost money this month, and I'm sure there are quite a few of them who don't watch my newsletter, right, that are going to try to make up for lost time. Right, I'm sure there are going to be quite a few people out there trying to make up for lost time or lost money at the end of the week, end of the month. That's why it gets so dangerous as the day gets later, and whenever you have those kind of intersections between end of the week, end of the month, always early in, early out. So again, we'll be keeping our eyes open tomorrow for unscheduled announcements out of that G20 summit. Early morning news, lots of inflation numbers tomorrow, maybe a little bit of oil around 8:30, and again. Got to have a good reason to be trading tomorrow after 10:30 Eastern time. Speaking of tomorrow, let's get ready for tomorrow. I want to make sure you guys are ready for tomorrow morning's trading opportunity. We got crude oil, S&P, Nasdaq. Of course, we can't forget about gold and euro to round things off tonight on the newsletter. Crude is first. Crude is bullish with a trading range and a hidden channel to work with on the chart tonight. Those are the two big components on this chart. The momentum is definitely bullish. We're back inside of this range. Surprise! Did you think they were going to break out of this? We nailed that 48 level. All right, that was pretty easy. We talked about that last night on the newsletter. The bottom line, though, is we're back into that range now. And so we're going to keep doing the same thing we've been doing all week here. One try, two try, back up. One try, two try, back up. One try, two try, back up. That's the basic idea here for tomorrow's trading session. Now, if we do get that deep pullback, right, take a look at the low of this hidden channel, right, because this hidden channel will really come into play here, right, as well, lining up those highs. Yeah, and if you look at this as a spike in channel, I completely agree. Right, I completely agree. That is probably what most people would see right now is a spike in channel. And of course, anytime we have a spike in channel, right, we always talk about finding those deep pullbacks, right, into the base of that channel, and that's exactly where, right, I'm looking for tomorrow. So I've got, really three main components here. One is momentum. Momentum is bullish. I want to buy. I want to buy at support. Where could I buy at support? Where can we buy at support? If I take this range, copy and paste it down, that's a support level, right? Copy and paste it up, that's a resistance level, right? But now I can see here this support area down at 31, right? That'll be a support level. I can buy off of that support level. Where else can we find some support? Again, I've got this kind of hidden channel, right? Draw out those lows. That'll be a support level, right? We can use that for a buy tomorrow as well. And then again, we talked about this earlier, right? But if you want to look at this as a spike in channel, I definitely agree with you on this. If that's a spike in channel, then I know that anytime I see a spike in channel, again, we talked about this in detail last night. Anytime I see a spike in channel, we always mark up the base, right, of that channel, and we want to get that pull back right into that base. So I'm definitely getting those warm fuzzies about this 84 to 31 area. All we need right now is a pullback. So what if price goes up? What if price goes down? What if price goes sideways? Well, if it goes lower here, that's kind of the ideal. If it goes lower here, here's one scenario to consider here for tomorrow. If it pulls back, goes lower, I would expect then that moving average to come down. I would expect there to be sellers that try to sell off of that moving average, right? Once we see those sellers engage off the moving average, then we have a 1, we have a 2, then we know where the stops are, right? I now know exactly where those sellers start to feel pain, right? We know those stops are now, and we can buy right into those stops. And what I always try to do is I always try to combine this 1-2 failure pattern with what we call a hidden channel pullback, right? So find that little hidden channel, right? And then look to buy off the low of that hidden channel, right? So you got two easy opportunities here. Again, it's a 1-2 try failure pattern. And then, of course, it's a hidden channel pullback pattern, right? Both of which are very reliable patterns. All we have to do is wait for it. Another pattern to keep in mind would be we call a two-legged pullback, right? Imagine now we go up, we pull back, we go down, right? There's the term two-legged pullback, right? 1-2. That creates that trend line. I can use that trend line now as a level of support as well, right? So that's also an option for us as well. Whatever you do, though, just don't buy that break. Just don't buy that break above that trend line, because often it will almost always come back, stop you out, or at least make you feel like you wish you were stopped out before it rallies back higher there. So there are three easy patterns if we can get that pullback here right now. What else do we have here? What if price keeps going sideways? If we don't get the pullback and we sit and we go sideways, it's possible here, end of the week, end of the month, it could be a bit of analysis paralysis going to the end of the week here. Who knows? If we do end up going sideways here, not much changes, but if we do end up settling into that range, it's very, very basic. It's the 1, it's the 2, right? The 2-try failure pattern. We'll talk a lot more about that pattern as we go. If we do start going sideways, if we do start seeing that moving average, right, flattening out, double tops, double bottoms, not much personality to it, right, then you want to wait for those sellers try once, sellers try twice, and to buy back up into those, right, into that high. Another question is, what if it goes higher here, right? What if it goes higher here? What's the plan up here? Okay, so basically there's two scenarios you want to keep in mind for up here. One, make sure you know where that level of resistance is. And again, that resistance level at 80, where does it come from? We take that trading range, right? The size of that range, that's all it is, right? All it is this range, copy and paste up to there, right? It's a major level of resistance. Okay, I can't even think about a breakout until we get through that level of resistance. Okay, so just be very careful trying to buy a breakout up here, because you're going right into where I would imagine a lot of long-term sellers are going to be hanging out up here. Right? They got their orders up here. They're going to sell the sucker right back down again, right? It may not be that dramatic, but we have to assume there's a lot of sellers up there. So if we do end up going higher, we've really got to push through that 52.80 before we can even consider really being a buyer on this. And really what you're thinking on this is you're thinking a strong 1, 2, 3. We call these 1, 2, 3 breakouts. Strong move up. That's 1. Pull back to the moving average, that's 2, and then strong move off the moving average, 3. That's a breakout. If we do get that breakout, then what I'll do is I'm going to mark up this high, and I've got to really be careful here, but I want to use that resistance now as support. Okay, it's going to be a little bit of a thread the needle. It's going to be a little bit tight here. The big reason why it's going to be so tight, big reason why it's so important, again, make sure you get that strong break through that high and buy that pullback. The reason why it's so important to thread the needle here is because you got that pendulum swing, right? That pendulum swing at 72, that's ultimately your short-term target once we get that breakout, because we have that trading range. There's my trading range, right? There's the amount of the move lower, right? The amount move higher, there's the pendulum swing. All right, and if you haven't quite bought into the idea of using these ranges, range expansions, two-try rule, go back and look at the newsletter this week, because this has been a great week. You've had a front row seat of how effective, if you know how to use ranges correctly, right? They can really, really be powerful tools. And the pendulum swing, right? The amount of the move down, move back up. Again, hopefully by now you're drinking the range-bound Kool-Aid, because it definitely showed us how effective it was here this week. So be careful with that pendulum swing. Now, another option, which we'll talk about in a second more on the E-minis, is if we do see that break higher, can we sell this thing back into the range? We can, but we have to use a different type of pattern. We have to use what we call the nested two-try. Now, go back and look back here. Here's a good example of what I'm talking about here. You'll notice we had that strong move down. And anytime we have a strong move in one direction, we always get a bit spooked, right? Just to buy it. I don't care where you are, right? I don't care what rock solid support levels down there, right? If you run down to that support, again, we knew this support was there last night, so we were aware this is probably going to end up back into that range. Again, we talked about this last night in the newsletter. But if we see that strong move down, I can't just buy it. Yeah, I realize that would have worked, but it won't work all the time, right? What you want to do is, if we go lower, what you want to look for is those sellers to try once, sellers to try twice, and then we'll buy up from there. And you kind of see how that works, right? Down, there's once, there's twice, and then up from there, right? It happens in all directions. You know, back here, for example, up, right? 1, 2, back down. That's the pattern we're looking for as we go higher. Again, I'm looking for that one try, two try, right? That two try failure pattern below the low. But if we go higher here, though, again, we don't go through the top of that range expansion, right? We make it a good effort, but now we pull back one, we pull back two. Once we have those buyers trying once we get them twice, right? Then we know if they fail, they're going to give up on this and we're going to collapse back down and looking for that sell back into that range from there. So it's a little variation of that two-try failure pattern. So today we talked about on the crude a two-try failure. We've talked about that hidden channel pullback. Bada bing, bada boom, right? Hidden channel pullback. We've talked about that two-legged pullback. Right? And we've also talked about, right, the nested two-try. All right, now I'm going to keep moving because we have a lot more to cover tonight. But if you want to learn more about those entry patterns, and if you want to see literally hundreds and hundreds of examples, real examples of those entry patterns, make sure you check out my free trading course. Very popular part of our membership package. I want to give you a behind-the-scenes look at our members section of the website. It's all part of that free trading course in the upper right-hand corner. It's also linked up with a big red button right below this video right now. Not to worry, pause the video, follow that link that's popped up, grab that free trading course. You're going to love it. You'll see hundreds of examples of these real patterns, and that way you'll get a deeper dive into the strategy we use every day in our trade room. Let's keep going. Now that we have our crude underway here, how about some S&P? S&P's bullish, but appears to be making its way back into the trading range we spent most of today's session. The momentum is still bullish, but I can sell this market short back to those lows if I can get the right variation of this two-try failure pattern. Now, if we get back to those lows, then my goal is to buy the low of this range using that two-try failure. Now, real quickly here, let me get this off here because, again, this is kind of a long-term target for you guys there. Let me get those off there so we can clean this baby up. Let's zoom out a little bit here so you get a little bit more of a bird's eye view. Bingo. There we go. All right. Looking good. So now we've got everything situated here, right? What do we got? A couple things here going. One, momentum. We're definitely bullish, right? I think that's pretty obvious. We're pretty bullish here right now. So I want to buy at support, right? Most reliable trades will come buying at support. What's the second thing? Second thing is the trading range, right? Trading range, right? Now remember, right? Remember, if a channel and a range get into a fist fight, right? Who wins? The range does. Remember, we joked around last night in our newsletter. Remember rock, paper, scissors last night. I sounded like a moron, right? Trying to think of the one thing that beats the other. The bottom line is that the range is more important than the channel, right? Range more important. That's the second piece of this puzzle. The third piece is the channel, right? And there's actually two channels here. There's actually one channel right here, which I really like, right? And there's another channel right here. They're both kind of the same thing, right? They're both important, but for different reasons. Okay, so three different components. One, bullish, I want to buy off support, right? Where is support? Support, trend line. Support, trend line, right? Where is support? Range, support, right? Want to buy off of, right? Want to buy off of support. Okay, now, looking at this now, zooming back in, now we can get a little more of a intimate look here, right? Now, as we go back down again, it's relative, right? The pattern we're looking for here at these lows is relatively easy. The big problem we're going to have, though, is this huge move above the range, right? That's a big move above the range, possibly a big move back below the range, right? Which means this thing could really collapse, right, in the overnight. Remember what I said earlier? The amount of the move above the range can be the amount of the move below the range, right? Take that amount. Doesn't need to be exact, but that will give you a general idea, right, of where that pendulum swing is, right? Can I think of it like that now, right, as that pendulum swing? So the bottom line is that this thing could collapse, and it could collapse real hard, right? Big move down. Now, we just talked about this, right? What do we look for? At the low of this range, what's our plan here? Our plan is to go one try, two try, back up in, right? Just like we saw back here, which was right at the battle zone, right, from last night's newsletter. One try, two try, back up in. That's the pattern that I'm looking for right down here, right? One try, two try, back up in. Now, if we get what I think we have potential to get here, right? If we get this big pendulum swing back to the opposite side, it's going to go like that, right? Face plant. When that happens, you've got to respect that momentum. And you're either going to get that major two try, or you're going to see the nested two try. Okay, let's play both of those scenarios, right? Major two try. 1, 2. That's a bear market at that point, right? It's a bear market. If it just goes like this, we're still bullish. But again, the way it looks right now, it's probably not. It's probably going to really collapse if it does. And I hope it does, because I'm going to talk about how to short this sucker in a second. So stay tuned on that. But obviously, if it's a shallow pullback, wonderful. We can use your standard, right, two try rule. But I'm assuming we're going to get this big leg down, second leg over. If I want to buy this now, I've got to get this thing with a nested two try. 1, 2, and go, right? So again, it's going to be a major 1 and 2, right? Again, it's momentum. Momentum is the key here. If we tumble off the highs, right, not just some little sissy pullback there, right? If we really tumble off these highs, you can expect you're going to get bears again coming in. They're going to sell that. They're going to crush it right back down again. Okay, we don't want to try to buy that. Let them do this, right? Let them do this. Then I'm going to look for what we call the nested two try. And imagine kind of like a, Marx or fractal. Inside of that, now we see sellers once, sellers twice, and now once we see that second try, now we can buy it right back up again. It's a little more complicated. I realize that, right? But that's the way the ball goes, right? That's the way the game's played. Okay? Again, if we just go 1, 2 like that, fine, right? But probably not the case, right? We're probably going to, because of this big collapse, if we do collapse, we're probably going to run, let it go again, and then 1, 2, right, back up. Or it's a straight 1, 2, back up we go, right? So now we've got the 1, right? There's the first try outside the range. Okay, maybe they don't get that second try, right? Maybe now all we get is the nested. 1, 2, bears try once, bears try twice. And again, what will happen is you'll see it clear above that moving average. And once it clears above the moving average, you're good to go. Make sense? Right? So 2 try rules on really on all sides here right now. 1 try, 2 try, back up. I'm expecting, though, this pendulum swing, big move down, right? Either going to be a big major 2 try followed by the nested, or it's a strong move down and then 1, 2, back up we go. Okay, relatively easy idea there. Now, how do we sell this sucker now, right? Get to the good stuff, JJ. How do we sell this stuff? Well, remember, strong move up. What do we know about a strong move? We know there are going to be buyers, right, trying to buy to go back up to retest the high. The buyers will be given 2 attempts to do it. You've already got 1. We're waiting for a second, and then we can sell into their failure. I mentioned earlier that we have this channel, right? I like this channel because this channel, it tells me there's probably going to be a lot of buyers trying to buy that pullback, right? I'm sure a lot of folks have learned how to draw those channels, but they're missing one big component. Again, if a fight breaks out between a range and a channel, who wins? Range wins all day long. Range is always the more important piece of the puzzle. Right? And it's really difficult to look at this and say that range isn't important. It was funny today because as the market was chopping around sideways, we're going, guys, this is a range. You know what's going to happen. They're going to go right into that battle zone. They're going to go 1, they're going to go 2, and right back up. And that's exactly what happened today. Too funny. Got to love it. So the bottom line is I want to sell this thing. I want to see it 1. I want to see it 2. Make sure they get that lower low. Right? It's not the same for it to do this, 1 and 2. It's not the same. That's not the same because if that happens, you'll have buyers coming in trying to buy that trap. Right? That's not the same. 1, pull back, 2, and then over. Right? 1, 2, and then over. Right? Momentum will come over. Let those buyers try once, let them try twice, and then back over from there. If we really get lucky, it's a 1, it's a 2, it's a trap. I don't want to give away too many of my golden secrets here. I've worked too hard the last 10 plus years watching these charts. I can't give it away all for free here, but I want to help you guys as much as I can here without being a client of mine. If we get that trap high, bingo. Right, bingo. Beautiful, beautiful pattern. Because then that takes care of the 1, the 2, right? It allows us now to literally sell right into buyers' stop losses. What will happen is on that second try, it'll do this. You'll see this big green candle. It's classic. These are like, this is comedy just watching it, right? You'll see this big green candle. You'll see a red candle look like this. Right? It'll be somebody will buy right above it. It'll be literally right and bam, right back down in. All right? So that's what we're looking for tomorrow. Sell back down in. Now, if we do collapse back down in and we sit inside the middle of the range, momentum is bearish. What can we do? 1, 2, failure. 1, 2, failure, right? So if we end up, there's plenty of ways to sell this. One will be the 1, 2, right, that nested 2 try. If we just roll over here and go sideways inside the range, absolutely. It's a bear bias now with the range. 1, 2 tries and back in, or we collapse back down. We've already talked about that plan already. All right. Again, tomorrow, careful tomorrow, right? Careful tomorrow, early in, early out. Fireworks tomorrow, end of the week, end of the month. All right, Nasdaq, we got your number up next. Nasdaq is bullish, trading at multiple levels of resistance, the prior week high and the range high. The momentum is definitely bullish, so my goal is to buy at support levels, right? I can also look for a more aggressive short off the highs if I can get the nested 2 try failure tomorrow morning as well. There are, again, much like the S&P 500, there are 3 main components. One is the momentum. Momentum is bullish, telling me I want to buy at support. Where can I find some support? I got a rising support trend line there. That's support level. Ding, right? I've got a range, right? That's support level. boing, right? And of course, right, what else do we have up here? Possible measured move, we break higher. I'm going to get that off there to clean this things off. Looking good, okay? We have a bullish momentum, we have a channel, and we have a trading range. Who wins the fist fight? The range does. What does the range tell me to do? A range tells me to buy that low. 1 try, 2 try, back down in. Or maybe we get this pattern, the nested 1, 2, go. See it right there? Pretty simple pattern, right? Okay, so we got 1, we got 2, back down, right? Just this at the S&P, right? If we really collapse down, don't get spooked. 1, 2, back up, or right, 1, 2, and then nested from there. Almost the same exact right strategy as we have for the S&P. Now, as we go, right, how do we sell it? Again, we've already got the strong move up. Those buyers, they're going to want to finish off that move, right? Let them try once, let them try twice, and again, if you really want to get sneaky, right, it's that trap, right? It's that trap. Right when you see those buyers getting too ahead of themselves, we'll drop it back in and sell it back down, right, into that trading range, right? A trap. Or if we do end up back lower here and we get stuck in the middle, right? Little trading range, set of range. Now it's a 1, it's a 2. We can sell back down off that high, right? Let them try once, let them try twice, right? And then sell it back down again. I could have some fun with you guys here. End of the month, end of the week, right? You gotta have a sense of humor right now. It's gonna go crazy in this world. Let's see here. What else we got? Again, buying opportunities here, right? I want to go down. 1 try, 2 try, back up. Or maybe it's a 1 try, nested, 2 try, back up, right? And again, if you want to see hundreds of examples of all of these patterns I'm describing, along with all the lessons on technical analysis, right? Plenty of opportunities to learn more about the strategy. Make sure you grab that free trading class. It's in the upper right-hand corner, the information icon up there. Grab that. It's also right below the video tonight, right on our blog with that big red button. All right, so pretty easy there. 1, 2, back up. Right? 1, 2, back down. I think that covers it. What does a breakout look like? Right? Breakout. 1, 2, 3, strength. We've got to see a ton of strength. If we get that strength on that 1, 2, 3 breakout, mark up that high, find the hidden channel, and that's my sweet spot right there. I want to buy the low of that hidden channel. Right? Hidden channels are such a great trading tool. You know, all of these things, you don't need more than an indicator than a moving average. You know, that's the best part. You don't need fancy software as long as you got tick charts. I would definitely recommend tick charts. So make sure you get a charting software that's tick charts. Use the moving average. Use 1 moving average, right? You'll notice I don't have dozens of moving averages on here. Right? I don't have all that crap you see most rookies. I did before, right? When I was a rookie, I had all kinds of crap on my charts as well. The problem is every time you add a new indicator, right, you add another voice in your head. You do. You know, imagine yourself at the dinner table and you've got 10 people, right, talking the top of their lungs, yelling across the table, right? You go crazy. Too many voices in your head. Right? And some of us probably already have enough voices already rolling around inside there. The bottom line, though, is get all the indicators off because the indicators are distracting you from the most important part of this, right? And that is understanding the 3 main components. 1 is the bull, right? The bull bias. 2 is the trading range. And 3 is the hidden channel. The range is the most important thing right now. Want to buy the low of that range. 1, 2, back up from there. If we do break out, get me some proof, then we can go out, find that new hidden channel and buy the low, right, of that hidden channel. Pretty easy strategy, very similar on the S&P. Let's keep rolling. How about some gold? Now, we talked about this last night. Gold did roll over today. This is the 219 contract on gold. And you'll have to kind of bear with gold. Gold is a market that has a very abrupt rollover. See, what happens in most markets is most markets have like an overlap. And I'm not an expert on contract rollover, but a lot of markets have an overlap, right? So what happens is is you've got the current month and you've got the next month. I hate to be simple about this, right? Most markets there's this overlap, right? Where you can't really go wrong, right? You trade in the current month, it rolls over, you slowly get that transition over to the next, right, front month. Gold doesn't work like that. It's just all or nothing, right? And so what happens is when gold has that abrupt, right, change, when we go from that current month, right, to that new month, what happens is the market almost has to like repopulate itself. And especially in NinjaTrader, for some reason, NinjaTrader has this weird kind of way about it where, and you'll see for yourself on most charting softwares, they have kind of a weird way of what they call merging the data. So you'll have to kind of get used to this on gold. The good news is it only happens 6 times a year because gold rolls over every 2 months, right? Every other month. So you'll have to be aware of that. The good news is it doesn't really affect us that badly because, we're day traders, so we only really need today's information anyways. But just so looking at my chart right now, you're probably wondering, are you sure you're on the right contract? I mean, look at left. It looks horrible. It's all because of the merge. Again, it's an abrupt change. So just roll with us on this. No pun intended there. Maybe there was a pun intended there. But, kind of roll with us on this because by the end of the day tomorrow, this will all be populated. It'll all be back to normal. It'll all be fine. So it's a little bit kind of nerve-wracking when you get rollover, but it is what it is. We're bullish on gold here. We're bullish into a trading range, right? We're bullish into that, right? Into that trading range on contract rollover. Momentum is bullish. So what's the plan? Buy below the low of that range, right? Use the 2-try rule. And we've talked about this quite a bit already tonight on the newsletter, and you know where to get more information to learn more about it. There are a couple different ways we can do this. Again, it's a bull market, so I want to be a buyer off the lows. I want to buy at support. I've got my eyes on that support level. I really like this support level here at 21.5. One of the big reasons why I like 21.5 so much is because you've got a combination of a range expansion, right? Take that trading range. It's just below it, right? Maybe 21.3 or something. Doesn't really matter. It's close enough, right? And then you also have that prior swing right there, right? And a lot of times when you come off these lows like this, right, those areas, they become hot spots. It's almost as if, imagine people didn't have the guts to buy it and they're still waiting down here, almost like they missed the bus. And they're going, come back to get me, right? And the buyers are sitting back there going, well, if I can get it here, I'll take it there again. So that area here really is attractive here. But really, any of these two areas are really looking great. I hope we get that deep enough pullback back to 21.5. Maybe we do, maybe we don't. So I like the area, right? Couple different scenarios here, trying to be a buyer off of these lows. 1 try, 2 try, back up in. If it really dips, right? Nested 1, 2, back up, right? And again, with those nested 2 tries, 1, 2, heads up for that trap, right? One of my favorite ways to use those nested 2 tries, right? That's your major one, right? That's a major one, major number 1, right? And then inside of it, while you're waiting for that second attempt, you're watching 1, you're watching 2, they're nested, right? They're inside 2 tries, right? And then bam, nice trap low and right back up we go from there, right? Now, I'm also kind of looking at this maybe as a trend line coming down here. So we do see a trend line here, maybe 1, 2, use that trend line. Again, I'm just trying to incorporate the 2-try failure pattern. It's a range. And we already have seen plenty of examples this week of why we like to use a 2-try rule when it comes to ranges. Okay, lots of different ways to use a 2-try rule. Ranges are the best. Okay, if we keep right in the middle here, what do? We sit on hands. Gold has been relatively sluggish lately. We get some big CPI numbers tomorrow morning, so hopefully that will get us out of there. If we do sit in the middle here, again, not much changes. 1, 2, back up. What if we go higher here? If we go higher here, I've got that key resistance at 39.3. So we really have to get that 1, 2, 3 break. It's really got to be a strong breakthrough. Then I can start looking seriously at buying those pullbacks from there. But I've got to clear above that 39.3. Could we sell this thing as it goes? Yes. Strong move up. What do we need? 1 try for the bulls. 2 try for the bulls. Right? Remember, it's going to try once, right? Anytime we see a strong move in one direction, we're expecting them to try it again, right? Get that another level. Just like we saw back here. Big move up. You're expecting them to try it again. And how many times will they try? They'll try twice. Once, they only need it once. Okay, so as we go higher, right? Once, twice. Again, if we can get that trap, we can sell back down, right? Or once, twice, down we go. So relatively easy strategy. The plan right now is let's get out of this range. 1, 2, back down, right? Or back up. Or strong move up. Nested 1, 2, back down we go from there. And again, if we get the trap, lucky us. Don't forget, what does a breakout look like? A breakout goes 1, 2, 3, clears through that range expansion, right? How many times do we see a market that really breaks down? It looks so bearish. It looks like there's nothing going to stop it, but it stops right at that range expansion, just like we talked about on the oil for that big move back up, right? That's how we knew that, right? That's how we knew that dip lower would be a buying opportunity from last night's newsletter. All right, easy stuff there on the gold. Tomorrow morning, keep your eyes open there bright and early. How about some euro? Yeah, very much the same, right? Euro's bullish, spike in range. So the plan is to buy the low of the range using that 2-try seller failure pattern. Now, this is a little bit different here because the range is really narrow, okay? Now, when I have a narrow range, what you want to remember is there's not much money to be made inside the range. So you always want to be very selective when it comes to breakouts or when it comes to trades when it's a narrow range, right? I'm really not too excited about a pattern like that. That's not going to get me too excited. There's not much profit potential there. What I'd really like is to get this thing like this, 1, 2, because now I can risk small for a nice big potential reward. Those are the types of trades that not only grow our account like a weed, right, but they also have a much better winning percentage because this is where the pros are waiting, right? Professional traders have learned that if you take small, right, if you go after small profits, right, real small, 4 or 5 tick profits all day long, the only person that gets rich is your broker, right? Professional traders have learned when we have a narrow range, let's get out of that range. Then make those sellers prove it once, twice, then we can buy it right back up. Don't mess with this stuff in the middle. Wait for it, 1, 2, back down, right? Let those bears give it the old college try, the old heave-ho, right? Let them take that second leg lower. Give it to them, right? But then you got to prove to me you can keep it going. If you can't, 1, 2, I'm back up in, right? Almost identical to what happened, right, on the oil and the Eminis from earlier this morning. Okay, so again, it's a bull market. That's one component. Trading range, that's a second component. I probably could have added on a channel on here, right? There is a bit of a channel there, but here's the giveaway. The channel's a waste of your time because we're not using the channel. You have to be able to explain the bounces. When you look at your chart, right, it would be foolish for me to ignore that range because the range is what's really going on here, right? The channel is just, it's a cherry on top, right? So in all reality, skip the darn channel. I'm not going to buy off that low anyways, right? I want it to go down, get out, 1, 2, let's go, right? Give me some meat on the bone, right? Go back up in. Okay, now, how do we break out? It should be relatively easy for this to break out. The problem is we've got to clear through this. One of the nice things about a narrow range is it is easy for a breakout, right? 1, 2, 3, that's easy, piece of cake, right? But it's got to go through that resistance area overhead. Find that new hidden channel, right? And wait to buy that pullback. It's always very tempting to want to try to predict these breakouts. Predicting breakouts are difficult. They are very difficult, trust me. Very difficult to predict breakouts, difficult to predict reversals. I always wait for the reversal, wait for the breakout. Much higher, right? Much higher winning percentage. I always remind you guys, when it comes to being a trader, right? You want to balance that profit with percentage, right? Balance profit with percentage, right? Yeah, I might be able to make more money if I buy the breakout, but that's only a 30% trade. I make a little bit less money if I wait for the breakout and then buy the pullback. Yeah, I might make a little bit less money now, but the trajectory of my account will be greater over the long run, right? I'll make a little bit less money, but I'll make that money more often. So when given a choice between what's more important to me, making money right now, right, or a higher winning percentage, I'll choose that higher winning percentage every day, all day. Because I assume you're here right now because you want a long-term career, right? There are lots of traders that make a lot of money in a short period of time, and they give it all back and some. It takes their money, but more importantly, it takes their confidence. And their confidence is like oxygen, right? If you make a big run up and you give it all back because you're trading based on money, right? Not based on percentage, right? That's when your trade account balance goes like this, right? We don't want that rocky equity curve. We want that nice, consistent, right, equity curve. How do we do that? We focus on the highest winnings percentages. We focus on the most probable opportunities. It's like walking into a casino, right? Skip the craps table and stick to the high roller slots, right? Those have the best. If you could find a fair game in a casino, right, those high limit slots would be your best option. Stick to the games in Vegas that have the best winning odds for you. Not that you're going to get very many good odds in Vegas at all, right? You're better off buying some baseball cards, those pawn shops, right, and holding on for a couple of years. The bottom line, though, is stick to the high percentage opportunities, right? Because high percentage means long-term success in your career. Guys, speaking of long-term success in your career, right, I have helped thousands of new traders just like you and experienced traders get back on track, right, every day as a client here at School of Trade. If you want to learn more, call me anytime you want. Pick up the phone and call that toll-free number, right? Learn more about our free trial. I have a great free trading class, which I've talked about a couple times already. It's part of that free trial. I'm always here on live support if you need help. And don't forget, we have 3 levels of membership, and every morning we get together with all of our advanced members in our trade room, 8 o'clock Eastern time, and we're going to execute this strategy. I'll tell you guys, give yourself a pat in the back. It was a very good month, a very good week, right? I'm really proud of you guys for following your rules. And if you had trouble following your rules, right, it might be time to recognize it's time to work with somebody to make sure I can hold you accountable. That's my job as a coach, is to hold you accountable, right? Give you the plan, show you how to do it, and inspire you every morning in our trade room to hold you accountable and show you that if you follow the rules, you focus on high percentage opportunities, you're going to be successful. Guys, I've taken up way too much of your valuable time. Hope you learned something. Hope you earned something with this tomorrow. Early in, early out tomorrow. Don't forget, there's no newsletter on Friday evening. I will see you guys in December. Next edition of our nightly newsletter is next Monday. Be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos.